All right, thank you so much. Welcome to today's session. We're just waiting for the viewers to join, getting started here momentarily. Okay, great. And if you are on YouTube, you can chat over questions. I see we got a few questions that have been chatted over. Thank you so much for doing that. If you're on LinkedIn, you can come over to YouTube now if you want to ask questions. Otherwise, you can also join, you have to come back later to YouTube and watch the recording. You can post questions in the comments on the recording, etc. So let's get started with today's presentation. So today we're talking about annual solo 401k requirements. So we're going to jump into the good topic and then field the questions at the end. So first off, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. We also would encourage you to join our community if you're not already a member. We go live every day at 1 p.m. Pacific, 4 p.m. Eastern. We also have forums where you can post questions 24/7 in our forums. So it's free to join. All are welcome. Okay. 1 second. Okay, as far as the agenda, we're going to talk about the solo 401k basics, the top benefits, eligibility, the setup process. Then we're going to go over those top annual solo 401k requirements. If you have questions, please chat them over in the YouTube. And we're going to field the questions at the end. Okay, as far as those top benefits, number one is contributions. So a solo 401k plan has the highest contribution limits for any defined contribution plan out there that's available to a self-employed individual. For example, for 2022, you can contribute as much as $61,000 or even $67,500 if you're 50 or older. With our plan, you can make those contributions as pre-tax contributions, which would allow you to reduce your taxable income, or you can make those contributions as Roth contributions or even Mega Backdoor Roth contributions, where you could get as much as $61,000 in, for example, a Roth solo 401k, or even $67,500 if you're 50 or older. And then you'd have the potential for tax-free growth. Another very common reason the clients set up accounts with us is the ability to invest in alternative investments. So with our plan, and we'll see as we go through the setup slides, we will set you up with an account where you're going to have checkbook control over the money. So you're going to be able to invest in things like real estate, notes, private placements, crypto, etc., because our plan allows for that, along with your standard Wall Street type investments like mutual funds, stocks, bonds, etc. And then, of course, we're fielding questions all the time from our clients in terms of how to make those investments, whether it's real estate, crypto, etc. Number three would be the ability to take a 401k participant loan. So this is where you can use the money for any purpose whatsoever, right? You could use it to remodel your home. You could use it to pay for your kids' tuition, etc. So you're literally borrowing the money from your own 401k account, and it's not going to be considered a taxable distribution as long as it's documented as a loan. So as part of our service, for no additional charge, we will prepare the required loan documents. In terms of the terms, you're going to be able to borrow up to 50% of the balance, not to exceed $50,000. You have to pay it back either monthly or quarterly. It's up to you. Equal payments of principal and interest, with those payments spread out over a 5-year term. So you're going to be able to borrow, the interest rate is going to be prime plus 1% or a CD rate plus 2%. Now let's turn to the eligibility. So who's eligible to set up a solo 401k? Well, really it's for an owner-only business with no full-time W-2 employees. So think like a contractor or a self-employed professional, like an attorney or a doctor who gets paid on a 1099 basis. Really the key is that you're just reporting that earned self-employment income and you have no full-time W-2 employees. In terms of the top eligibility considerations, do you need a separate entity like an LLC or an S Corp? No, you don't. We have many, many clients who operate without a formal legal entity. They're operating as a sole proprietor, which is fine. The key is that you report that earned self-employment income on your taxes. There's no minimum amount of earned self-employment income that you need to report in order to be eligible. Your spouse or business partner may participate as long as he or she is reporting their own earned self-employment income. You can set up a solo 401k even if you have a W-2 job, even if you participate in your W-2 employer-sponsored plan. The key is that you got that separate side self-employment income with no full-time W-2 employees working for any business owned by you or a spouse, if any. Let's go over the process. So a 401k is a legal entity. It's a retirement trust. So like any legal entity, it's the documents that create the plan. It's really not just the account, right? I mean, you need an account, of course, to have your investments, but that's not what creates a 401k. What creates it are the documents. So we have IRS approved documents that are going to allow you to do what you want to do, whether it's Roth, loan, alternative investments. We draft those documents specifically for your business within the same day or 24 business hours. We send you an email with a link to our portal where you can access those documents that were drafted for your business. There's going to be a second link where you can upload the signature pages, and then a third link where you complete a quick online questionnaire. Just takes like a minute to tell us where you want to have the accounts at. Because with our plan and our platform, we're neutral as far as where the accounts are at. So you can have those accounts at the bank or brokerage of your choice. At the same time, we're very hands-on in helping you open the account, right? So we'll prepare, for example, the paperwork to open up an account or accounts at Fidelity, Schwab, TD Ameritrade, your local bank, just down the line, just to name a few examples. So once the accounts are opened up, it's time to fund the accounts. So you can fund those accounts in two ways. You could roll over money from an existing retirement account, or you can make contributions. And we're here to handle that and help you, right? Whether it's preparing the transfer forms, helping you understand how much you can contribute, etc. Once the account is open and funded, it's time to start using it, right? You could take that loan, you can make that investment, etc. So again, you upload the establishment documents, submit the next steps online questionnaire. We'll go ahead and get an EIN number specifically for the plan, which meets that IRS expectation, different and distinct from the EIN number that you might have for your business. And then we'll prepare the paperwork to open up the accounts at the bank or brokerage of your choice. Now, as far as some of those account opening considerations, you'll need separate accounts if there's different participants, like a husband and wife that are both working in the same business, right? In that case, it's one plan sponsored by that one business, but separate sub-accounts for each person. The different types of funds, right? If you have pre-tax, Roth, Mega Backdoor Roth, now you've got different sub-accounts for each of those different types of funds. You could have accounts at a bank or brokerage or even both. And typically what drives that decision is what you want to invest in, right? Of course, if you want to invest in things like a mutual fund or stocks, you need a brokerage account to do that. If you want to invest in alternative investments like real estate, you might want a bank account. Of course, you can invest in real estate from a brokerage account that's set up for your solo 401k, because that brokerage account is governed by our plan, which allows you to invest in real estate. But a lot of our clients find that it's helpful to have a bank account because now you get access to things like a certified bank check, you get access to a debit card, which may be helpful, for example, for your rental real estate investment, for example. So things to think of. Again, we'll help with the transfer process. This is a good slide. It shows you that you can transfer money from a former employer plan, a traditional IRA, but not a Roth IRA. You can't transfer money from any Roth IRA to any type of 401k, including a solo 401k, because of those Roth IRA rules. As far as current employer plan, you typically would have to leave your job, although there are exceptions, right? If you're over 59 and a half, or if you rolled money into the plan from a prior plan. But typically, if you have money in a current employer plan, you're going to have to first leave your job before you can initiate a rollover. So now let's turn to those top solo 401k annual compliance requirements. And then we're going to go through the questions that are being presented in the YouTube. So thank you so much for teeing up those questions. So before we jump into the top annual compliance requirements, we first want to highlight that with our fee, it's a totally flat fee structure. For example, the ongoing fee is $125 a year. So, and that fee is for being the plan document provider. So as the plan document provider, we're going to do a number of things in that role for no additional charge. And that really is unprecedented if you look across the solo 401k provider universe. So number one, the Form 1099-R. So we prepare that 1099-R for your records and then submit it to the IRS. So it includes preparation and submission. Why would you need a 1099-R? Well, it depends on what's going on with the account. But let's say you converted funds, right? If you're making the Mega Backdoor Roth contribution, you're necessarily going to be needing a 1099-R. Because you're going to make that voluntary after-tax contribution and then move the money to either a Roth solo 401k or Roth IRA. In either case, that's going to require, necessitate a 1099-R. And again, preparation and submission is included for no additional charge as part of our role as the plan document provider. What's another reason that you might need a 1099-R? Well, let's say you took a distribution, right? You transfer money out of the plan, whether it was a required minimum distribution because you're of that age, or whether you wanted to just take money out, or whether you wanted to transfer it out to another retirement account like an IRA. That's another reason. In-plan conversion from pre-tax to Roth. So not from after-tax to Roth, but pre-tax to Roth, where you're paying the taxes in order to put that money into your Roth account. So not only do we handle the preparation and submission, we also have a very streamlined process. So we'll collect the information from you 24/7 on our website. We have an online form to make it very easy for our clients to give us the information that we need in order to put your plan in the queue for us to prepare that 1099-R. So that's going to definitely be a top solo 401k annual compliance requirement. So what's another top solo 401k annual compliance requirement would be the Form 5500-EZ. So when do you need to file a Form 5500-EZ? What is a Form 5500-EZ? Well, a Form 5500-EZ is an informational tax return that's providing information. So you're not having to pay taxes. It's not like a tax return where you have to pay taxes like you do with respect to your business or your personal taxes, but it's for the plan. It's provided to the IRS, and it provides information about the plan, right? And so you don't have to file that until the value of the plan assets exceeds $250,000 as of the end of the year, December 31st. And then it's due by the following July. So as part of our service as the plan provider for no additional charge, we handle, again, the preparation and submission of that Form 5500-EZ, submission to the IRS. In addition, we handle it in a way now where you're able to file it electronically to make it easy for you. Again, unprecedented if you look across the solo 401k provider world where it's included at no additional charge. For example, if you have a basic plan at, say, Fidelity or Schwab, they're not going to handle the 5500-EZ. They may not even tell you that you need to file it. So For our clients, they just simply have to let us know once the value exceeds that plan asset amount of $250,000, so we can put them in the queue to prepare the Form 5500 DZ. Again, preparation and submission is part of the fee for no additional charge. So again, that's a very important top solo 401k annual compliance requirement. So we want to take a moment to highlight it. So what else is important in terms of that ongoing compliance requirement? Again, you need the plan documents to create the plan, but you also need to hold your investments in separate accounts, dedicated accounts for your 401k. As we talked about in the setup slides, we're preparing the paperwork that's needed to open the account or accounts at the bank or brokerage of your choice, right? We're neutral. We don't force you to go to a specific bank or brokerage. We allow you to choose where to hold the solo 401k funds. But at the same time, we're not just turning you loose. We're very hands-on. As I mentioned, preparing that paperwork. We'll get on the phone with your banker, etc. Same thing with the brokerage. And again, you can have both bank and brokerage. So we'll pre-fill, we'll prepare those brokerage forms that are required to open up an account at the brokerage for your plan, for your solo 401k. Also funding, right? So transfers, rollovers. We will prepare the paperwork. And what's interesting is that we have clients that are transferring funds from hundreds of different places. And each one of those different places oftentimes has their own unique process, whether it's a form, whether they take it over the phone, whether they do it online. It can even vary based on the different type of account that you have. So we're very hands-on in pre-filling that paperwork or giving you the online or telephone instructions, or again, even calling them with you. And we can leverage all the years and years of experience that we have, because if you're looking to transfer it from a particular place, like whether it's John Hancock or Voya or Principal or whatever the case may be, we've helped many other people transfer the same type of accounts to their solo 401k. So of course we track all that and leverage that to make it easy for you to streamline when you're trying to fund your solo 401k with a rollover. So now let's turn to the questions that are being presented in the YouTube. Thank you so much for bringing the good questions. So we're going to share them on the screen and then go through them sequentially. How do you determine the value of your 401k if your 401k owns appreciating assets, real property? Do you base it on the purchase or the current market value? So presumably you're talking about, this question is referring to, for example, that annual Form 5500 EZ filing requirement, which again, we handle the preparation and submission as part of the service for no additional charge. So that 5500 EZ is really a snapshot of the value of the plan assets as of the end of the year. And so you would need to know the fair market value, so not the original purchase value, but that fair market value of the plan assets, including the real estate as of the end of the year. So you may have cash in the bank. Obviously, that's easy. You just pull up a bank account statement showing the value as of December 31st. As far as the real estate, clients will use things like comps in the area. Again, you need to make a reasonable determination of the value. And so that's an example of the approach that is taken. Comps in the area, you could talk to your local advisors, like a real estate agent who's going to be really an expert on the value in that area of the similarly situated properties. But again, the 5500 EZ purpose is to show the value as of December 31st. So it's a snapshot. You need that current market value, or at least the value as of December 31st. When was the last 401k update? So there's a major update every 6 years. So what's being referred to as the cycle 3, all plans across the whole industry have to be updated. We've been using the updated documents since last year. So certainly if you're signing up with us, you're going to have the updated documents. And then in the intervening period, that's a major update. There could be minor updates throughout that intervening period where the plan documents might need to be updated. Right, and that's really because 401k plans oftentimes are a subject in Washington, right? It's sort of a political football. The rules change, and the plan documents need to be updated, right? Maybe they raise the required minimum distribution age, for example. So what's great about our plan and our service is that we're automatically updating everyone's plan documents as part of the service for no additional charge, right? As that, for that, being that plan document provider. Thank you for the good questions. Don't hesitate to chat over more questions. Okay, next question. For an S corporation, if you make an after-tax or Roth solo 401k contribution, does payroll need to report it during the time period contributed or only at the end of the year? So great question. And as we talked about, as far as the benefits, being able to make contributions is one of the top benefits. And specifically, one of the top benefits of our plan is being able to make Roth and even Mega Backdoor Roth. And the way that one makes contributions, the way that one makes Mega Backdoor Roth contributions is really by technically making what's called a voluntary after-tax contribution. So we've got deep experience in helping clients with those types of contributions. And during the month of February this year, that really kicked off contribution season. Because what's interesting about a solo 401k is that for a self-employed individual, as long as you set up the plan by the end of the tax year, you preserve the right to make contributions all the way up until the business tax return deadline. So a lot of folks will set up the plan by the end of the year, say last December, and then they're trying to make all their contributions before their tax return deadline, including any timely filed extension. So during that month of February, we hosted 12 deep dive sessions on our community, going over, again, deep dive contribution rules, limits, scenarios. And so you can access all the slides on this contribution guides page. So if you go to mysolo401k.net and you were to search for contribution guides, the second search result is going to have this page where you can access those slides and those videos. And so, for example, to your question, and it's organized by how your business is taxed, because the rules can be slightly different based on whether or not you're an S corp or a sole proprietorship or et cetera. So if we were to go to the S corp slides, Mega Backdoor Roth, and then scroll down to slide, we're going to guess in the 30, there it is, 33. You can see that we've got here, how do I report contributions? So to your question, it's not reported during the payroll, right? It's reported on the W-2, which is issued after the end of the year. So what's reported are employee contributions. So not the employer, but employee. So it's on the W-2, that is. So you do report the pre-tax, you do report the Roth. The voluntary after-tax may be reported. This is per those W-2 instructions, but it is optional. So Roth would go box 12 with code AA. Pre-tax is box 12 with code D. Voluntary after-tax may be reported on box 14, but again, it's optional. So hopefully that helps. And again, if you are watching on, say, LinkedIn, feel free to come and join us on YouTube. You'll be able to check out the recording there. Again, we also go live every day at 1 p.m. Pacific, 4 p.m. Eastern, generally on our community, which is at mysolo401k.net/my-community. You can also, by joining the community, it's free to join, all are welcome. You can also get access to the forums where people post questions 24/7. So it's a great way to learn and to share the knowledge. Okay, let's keep going with the questions. Thank you so much for all the good questions. Can you have both a Schwab brokerage account as well as a bank account for alternative investments? Absolutely. You can have both. And a lot of people do that. They may have the bank account again for the alternative investments, because now you get access to certified bank checks. Now you get access to a debit card. Let's say you want to go to an auction to bid on a property, a rental real estate property. And let's say between deals or as you're accumulating that rental stream, you want to invest that in a mutual fund. Obviously, you can't invest in a mutual fund from a bank account. So you could just simply transfer the funds over to your Schwab account and then invest. And so that's not going to be a reportable event. It's not a taxable event. You're just moving funds between sub-accounts. Good question. Why no Roth IRA rollover to solo 401k? Well, really, it's just the rules and the way that they are. You cannot transfer funds from a Roth IRA to any type of 401k, including a solo 401k. I think if you really dug deep on the why, it's because the rules are slightly different. There are important differences between, for example, when you take money out of a Roth IRA versus taking money out of a Roth 401k. So it's really not like to like. If you have Roth IRA funds, you're trying to put it into a Roth solo 401k. Now, of course, you can transfer money from a Roth 401k. Let's say you had a former employer plan with Roth funds, and we're seeing more and more folks with in that type of scenario. So you could transfer money from a Roth 401k over to a Roth solo 401k, but not Roth IRA. Thank you for emphasizing that. Good point. Let's say the C Corp is established for the IRA LLC, then first 21% corporate tax will be applied to, I understand what you're saying. So if you have a C Corp, the so-called C Corp blocker, so you have an IRA that owns an LLC that elects to be taxed as a C Corp, first 21% corporate tax will be applied on any profits, but the second double tax on dividend withdrawal also applies even if IRA LLC is Roth. Well, of course, it's going to depend on the facts and circumstances. And presumably or the idea here is to avoid unrelated business income tax, or at least reduce it by paying the corporate tax as opposed to the UBIT tax rate. And so if the LLC is taxed as a C Corp, it distributes profits up to the owner, meaning the IRA. Those are going to be growing inside the IRA at a tax deferred basis, potentially even tax-free if it's a Roth IRA. Now, if you were to take a non-qualified Roth IRA distribution, then you may have to pay tax on the money in the IRA. But hopefully that helps. It's really no different than if you had profits from any C corporation in your IRA, right? I mean, if you have profits from Netflix or, a publicly traded stock, dividends on a publicly traded stock, all publicly traded companies are C Corps. So hopefully that helps you. That's a good question. Hopefully that helps you think through that. Thank you for bringing all the good questions. So next question, are the 1099-Rs for personal tax return or business tax return? Well, so it's filed for the plan to report the distribution, the conversion, whatever the case may be, and then you want to give it to your personal tax advisor to file with your personal tax return, because it's personal to you, not to your business. Right? If you take a distribution from your retirement account, that's taxable income, you report that in your personal tax return. And then you got the 1099-R that's reporting that taxable distribution, to give a simple example. Hopefully that helps. Thank you so much for the good question. Which banks do you recommend in terms of its flexibility for my solo 401k plans? Well, based on client feedback and experience, and again, it's important to note that we don't force you to go to any bank, but at the same time, we're very hands-on. We've got clients at hundreds of different banks. A lot of times those clients, based on our experience, have found that the local bank or a credit union is what we hear best about, right? And a lot of folks like that because they want to be able to go into a local bank or local bank branch or credit union branch to handle matters with respect to their account. So, and again, we will prepare the paperwork, what we call our bank account packet, that really has the documents that 9 times out of 10 the bank requires to open the account. But if there's questions, we can also, get on the phone and answer any questions that the banker might have. Oh, I'm sorry, I skipped a question. Sounds like I think I just haven't gotten to it yet. Thank you for highlighting it, though. Let me know I think we're going to your questions now. I have my own LLC, one-member LLC with an EIN. I have no employee. if I pay myself a W-2 salary, am I still eligible for the solo 401k? Great question. So presumably you're talking about an LLC for your self-employed business activity. And so what's helpful to understand is that you don't need to have an LLC. It's fine, of course, if you do, but what's really most important is that you have earned self-employment income that you're reporting in your taxes, right? So if you're taxed as a sole proprietor because either you don't have an LLC or it's a single member LLC that's disregarded, so all that income flows onto your 1040, earned self-employment income is reported on Schedule C. So that's really the key, not so much whether or not you have an LLC, whether or not you have an EIN for your business. None of that's really required. If you have it, it's okay. Of course, there's no problem. But the key is that you're reporting that earned self-employment income, right? Because if you're setting up a solo 401k, you're effectively taking the position that you're self-employed. So it's not going to be consistent with that position if on your personal tax return, you don't even report any earned self-employment activity, whether it's on a Schedule C, or if you did have a formal entity like an LLC taxed as an S Corp, you would get a W-2 from that S Corp, and that would be your self-employment income. Or if your business is taxed as a partnership, you have income reported on line 14 of the K-1. So if your business is a single member LLC, you wouldn't necessarily need to pay yourself a W-2. What most folks would do is have just the income, the earned self-employment income reported on Schedule C. And again, have the no employees working for any business owned by you or a spouse, if any. Hopefully that helps. Thank you for bringing all the good questions. I went to a local Fidelity branch and opened a solo 401k account. How come I have not received an EIN for my solo 401k? So if we presumably you opened an account with us and then you submitted the questionnaire telling us to help you open up the accounts at Fidelity, and then we prepare the paperwork to open up the account at Fidelity. So we would have listed the EIN number on the Fidelity paperwork. Feel free to please just email us and we'll be happy to provide you a copy of that EIN number. So hopefully that helps, and please don't hesitate to reach out so we can get you that EIN number. But absolutely, that's our process. We obtain the EIN number, then prepare the Fidelity paperwork. We put the EIN number on the Fidelity paperwork. Okay. Thank you again for all the good questions. If I own two different businesses and pay Social Security and Medicare from income on each, can I make a contribution to my solo 401k for both of those businesses? So definitely, we have a lot of people who are self-employed and have multiple streams of income, right? They're serial entrepreneurs, as they say. And so you're absolutely allowed to aggregate. In fact, you do aggregate from all sources of self-employment income in order to make a contribution. Now, the key is that you can't have any W-2 employees working for any business owned by you or a spouse, if any. So if you have someone that has a business with employees, then they got another line of self-employment income that doesn't have any employees, well, they're not going to be able to set up a solo 401k, even based on that one business that has no employees, because those two businesses together are going to be viewed as a unit, what they call a control group. And so the fact that they have employees for one business is going to preclude them from opening a solo 401k for any business. But if that's not your scenario, then yes, you would just set up one plan, one fee, make contributions based off of in aggregate of all your self-employment income. Hopefully that helps. Thank you so much, everyone, for the great questions. We do have more time if you want to chat over more questions. Again, in the meantime, we'll encourage you to join the community. We go live every day at 1 p.m. Pacific, 4 p.m. Eastern, post questions 24/7 in our forums. So we got a couple more questions. So yes, let's turn to those. Thanks for bringing them. Again, and if you're on the other platform, LinkedIn, please feel free to join us on the YouTube right now. If you're watching live, you can also join. You can also go to YouTube and watch the recording. You can join the community, mysolo401k.net/my community. Free to join, all are welcome. So thank you so much for all the engagement. So is a solo 401k better than a SEP IRA? Yes, in short. Why? Because you have higher contribution limits with a solo 401k. You can make Roth contributions. You can make Mega Backdoor Roth contributions. You can have a loan. It's much, much easier to invest in alternative investments like real estate or crypto or precious metals. So yes, there's a number. There's no advantage of having a SEP IRA in terms of making contributions, because if number one, if you have a safe harbor SEP IRA that was used, you'd have to ask the SEP IRA provider whether it's a safe harbor SEP IRA, whether they used Form 5305 to set it up. One can't make contributions for the same year to that type of SEP IRA as well as a solo 401k. But even if it's not, you still have to aggregate contributions for purposes of the limit. So you're not going to be able to make any more contributions by having a SEP IRA. So they really faded for all those reasons. We have a good post on our website that goes over the differences, video, etc. So I'll chat over the link. If you just were to search for solo 401k versus SEP IRA, it'll come right up on our website, mysolo401k.net. Next question, does the plan start date always begin on January 1 of the year that you open the 401k plan, even if you incorporated your business later than January 1 of that year? Yes, that's the industry best practice, is that it's effective as of January 1 of the year that you set up the plan. Therefore, you are able to make contributions based on income earned throughout the year. Yes, even if you incorporated your business later than January 1 of that year. Good question. Okay, back to the C Corp blocker question. So here we go. It's really just, we're going to treat it as one, please. Can you please confirm your second double tax will not be applied in distribution with C Corp blocker into a Roth IRA LLC? 21% corporate tax will be applied, but additional double tax will be applied. Will additional double tax be applied when distributions are withdrawn in Roth funds on IRA LLC? Well, so let's be clear. So you're really asking, I understand, about how are distributions from a C corporation to a Roth IRA treated, and they're tax deferred, right? That's no different from whether it's a publicly traded company like GE. If you have GE stock inside your Roth IRA, they pay a distribution, dividend, really. You know, it grows tax deferred, potentially tax free. It's inside your Roth IRA. The fact that it's a distribution from a LLC that's owned by your Roth IRA, taxed as a C Corp, doesn't mean it's going to be treated any differently. But if you're really, so the money that flows from the LLC to the Roth IRA is not, it's going to be treated taxed as I just mentioned above. If you're talking about taking a distribution though from the Roth IRA, it's going to depend on whether or not it's a qualified Roth IRA distribution. If it's a qualified Roth IRA distribution, then it's tax-free. And that's not a function of what you invested in or how that money grew inside your Roth IRA, right? That ship's already sailed. Now we're talking about a different question. You know, once the money's in the Roth IRA, now you take it out, how is it taxed, right? Well, that you got to look at those Roth IRA distribution rules. Is it qualified? Is it not qualified? Etc. So hopefully that helps. Okay, well, that looks like it may take us to the end of the questions. Thanks so much, everyone, for all the engagement. Please like and subscribe to our YouTube channel. We really appreciate that. For more videos like this, please join us in the community. We're there every day at 1 p.m. Pacific and 24/7 in our forums. Thanks so much and all the best.